Everyone, this is Dave Meyer with BiggerPockets. Welcome to this live stream of top cash flow markets. We're going to be talking about the 5 top cash flow markets according to a recent analysis that I did. We're also going to talk a little bit about the very simple math that I did. So if you guys want to run this kind of analysis for a market that you're considering investing in, you can do that. Having good data like this to be able to evaluate your market is super important. So I'm going to talk just a bit about that, and then we'll talk about the top 5. If you are here, please let me know if you can see and hear me. Oh, there's I can see Lorraine Marquez, Joshua Lynch, some weirdo named Andrew Keel is here. Thank you, Lauren. It's nice to meet you. All right, thank you all for being here, and I will hang out for a bit after I talk, and we can I can answer any questions that you guys have. All right, thank you, Ricardo. Appreciate you saying that you're here. So let's just jump into this. Before we get into the information, I'll tell you a little bit about myself and why I am here speaking to you. I do work full-time at BiggerPockets. I'm the Vice President of Growth and Analytics. I've been investing in real estate for just about 10 years. I can see that my trusty real estate agent, Andrew Keel, is watching this on Facebook right now. If you're interested in investing in Colorado, hit him up. But I've been investing for 10 years. I am both a short and long-term renter. So I have mostly some buy and hold properties in Denver. I do have one Airbnb short-term rental in Colorado as well. And by training, you know, before I became a real estate investor, I am a data scientist. I started my career doing financial modeling and all that sort of stuff. And as I've gotten into more into real estate, I've really sort of gravitated towards the data side of things, trying to find great markets, trying to analyze properties that are going to see great cash flow, markets that might see some appreciation over the next kind of years. So that is what I do for my own personal investing. It's also part of what I do at BiggerPockets is help build tools that are going to share that kind of data with all of you. We'll be launching that in the next couple of months. So this is just kind of a preview for what BiggerPockets Insights is going to provide over the next couple of months. So that is who I am. And let's just jump right into this. So as we talk about cash flow, we're going to use a metric that I call the rent to price ratio. Basically what it is it measures the percentage of a house's price that is covered by rent each year. So basically you look at a city, you take the average monthly rent and multiply that by 12. That's how you get your annual rent. And then you divide that by the average home price. And the reason that this is such a good metric for people, especially beginners who are trying to find a good market to invest in, is that it approximates cash flow. Basically, if you are buying a home, you're probably getting a mortgage from it. And by knowing this ratio, you can approximate how much of your mortgage you're paying. But I want to make clear that this metric will not help you account for certain things like exactly how much your rent is going to be, what your expenses are going to be, how much taxes or insurance are. So this is really just meant if you're looking at a high level at different markets, if you're scanning a whole state or a whole city or the whole country, and you want to know what markets should I be interested in, this is a great way to do it. But if you want to actually go and find a deal, you're going to need to get much more detailed than what we're talking about today. You're going to have to go and find specific rental comps for the property that you're looking in. That's something you can find on BiggerPockets in the next couple of months. And you can also, you're going to need to find expenses. You're going to need to figure out taxes and insurance, which you can learn how to do also for free on BiggerPockets. So that is basically what this does. But if you guys are familiar for the 1% or 2% rule, this is very similar to that kind of equation. With the 1% rule, though, you are looking at monthly rent. I like to look at it for annualized rent. I don't really know why. That's just my personal preference. So rather than a 1% rule, I use a 12% rule because it's just like the 1% rule, except that it's multiplied by 12, just like annualizing the rent. Does that make sense to everyone? All right. Thanks for joining us, everyone. From Matt, Victor, And Verna, oh, Memphis, Tennessee, you're going to like this presentation. And we're talking about top 5 cash flow cities. All right, so basically, because if you're familiar with the 1% rule, I use something I just call the 12% rule. It's not as catchy, but basically anything that's above a 12% is going to be a home run deal. But that being said, this is a rule of thumb and not a requirement. I hear a lot of newbies who are sort of get stuck because it's not meeting the 1% rule or the 12% rule. And while that's true, and that's, if you can find that, great. A lot of markets are very difficult to find that. The 1% rule was invented in 2012 when the market looked very different. That doesn't mean it's a bad time to buy. It just means that you need to understand what the baseline is. What a good deal has changed a little bit. And so if you find something that is an 8%, 10% rule, you're probably still getting one of the best deals that's out on the market today. So just something to keep in mind. All right. So one thing I like to do as well, which is sort of something that, if you're a newbie, you don't need to do, but it does really help, is I like to adjust the rents for vacancy. So basically, every city, you can find a vacancy rate. A good place to look for that is census, on the census. So again, I want to just really stress to you guys how important it is to get good data for this kind of evaluation, whether you're looking for markets or whether you're analyzing an individual deal. Like, getting as good data as you can is extremely, extremely important. So some good for, you can probably find it for your local market by Googling it or something like that, but you can look at census data for vacancy. And basically what you do is you multiply the rent by 1 minus the vacancy rate. And that might sound a little complicated, but basically if your vacancy rate is 10%, you want to multiply it by 90%. So 1 minus that 10% is 9% or 90%. And so you would multiply that rent by 90%. And the reason you did that, you do that is because if a city has a really great rents but really high vacancy, you're not actually going to get that rent. You're going to get much lower on average through the course of your investment. So by multiplying your average rent by your occupancy rate, that's basically what you're getting by 1 minus the vacancy rate is your occupancy rate. That is how you can get a much more accurate sense of how stable your rent is going to be over the course of years. Jim Arcadipan, you're from Westchester. I'm also from Westchester. Are you talking about Westchester, New York, or Westchester, Pennsylvania? And Jim, to your point, yeah, census data is a bit old, but it is, that is something when you're looking across a lot of cities, you can look. If you know anywhere else, I'm happy to know. That is, again, something on BiggerPockets Insights, which we're launching in about a month or two. We'll have vacancy data that is up to date. So stay tuned for that, but good point there, Jim. So I hope everyone understands this. So basically what we're going to be looking at for these top 5 markets is what percent of your home price is covered by your vacancy adjusted rent. Make sense? Great. Cool. So let's get started. So number 5 here, the number 5 best cash flowing market, according to this overview, high level analysis, is West Palm Beach, Florida. The average rent is just about $2,200, and the average home price is just over $200,000, and the vacancy rate relatively low at 8%. It's just about average, but a little bit low. The adjusted rent to price ratio is 11%. So I said 12%, that's the rule of thumb. But as you can see, these are the top 5. So really, when you're looking at markets, if you're getting 7, 8% for the adjusted rent to price ratio, you're probably doing really well. Like in Denver, where I still actively invest, it's probably like 5%. So these are just averages. Keep that in mind, because by rule, if there's an average, that means there are deals in that market that are better than that and that are worse than that. So you can find a property in West Palm Beach that would have a rent to price ratio of 15. You can also find one that's 6. So your job as the investor is to go out there, know that West Palm Beach is likely to have good deals, and then go and find the one that has a 10, 11, 12, 13, something like that. All right, number 4, we had someone here earlier, I lost it in the thread, from Memphis, Tennessee, but Memphis, Tennessee is the 4th highest cash flowing market according to our analysis. The rent here is a lot lower, less than half, just over $1,000 a month. And the average home price, though, is way lower as well, about just over $100,000. You see that the vacancy rate is a bit higher, so that's going to take down our average rent a bit. But the average rental price is still 11%, just a slight bit higher than West Palm Beach, Florida. And that is what we have for Memphis. All right, let's go to number 3, which is Arlington, Virginia. So again, we're seeing a much higher rent here. So almost $2,600 a month. The average home price at $232,000. Vacancy rate sort of in the middle of everything we've seen at 9%. And the average rent to price ratio is 12%. So climbing up there a little bit better than the first two that we've seen. I just want to make a point here that we're seeing both West Palm Beach and Arlington had rents and home prices that were nearly double Memphis, just to go back to that. So just as a point, it doesn't, you can find cash flows in cities that have a higher average home price and a lower average home price. That's why using a ratio like this is really helpful, because it's sort of agnostic to what the average prices are in that city. It's really just trying to figure out how much cash can you get in there, get from there. All right, number 2, Baltimore, Maryland. So this is $1,600 a month as your average rent, and the average home price just over $100,000. So reminder, look at this for Memphis. Memphis was a very similar average home price, but was just over $1,000 in rent. Baltimore has an average home price very, very similar to Memphis, but the average rent is $1,600. So much better rent there for a house that's a very similar price. This is exactly the kind of analysis that I was hoping to show you here. Vacancy rate at 8%, but because that rent is so much higher with a low home price, now we're seeing a rent to price ratio of nearly 16%, which is better than way better than Memphis, about 50% better. All right. And then the number 1, does anyone have any guesses? All right. While you're guessing, Carla Davis asks, what was the formula again for the vacancy adjustment? So basically what you do is you want to figure out the occupancy rate. So the way you do that is you can either Google your occupancy rate, or you do 1 minus your vacancy rate. So if your vacancy rate, for example, in Baltimore is 8%, 1 minus 8% is 92%. So then you would multiply 1,600 by 0.92, and then divide that by 107,000, and that's how you get that 16%. But you also have to, you have to multiply rent 1,600 by 12 to get the annualized rent, then multiply that by 0.92, and then divide that by the average home price. Indianapolis, Robert, yes. Alexis asked if we're going to leave this in YouTube. We certainly will. Jacksonville, Austin, Jacksonville, Atlanta. We got a lot of Jacksonville guesses. This is really good. All right. And then Arizona, Nashville, Tennessee, Indianapolis. No one got it right. All right. It is Cleveland, Ohio, with an average rent. Oh, whoops, I typoed. Forgive me. But the average rent is $1,100, but the home price is $68,000. Sorry, I wrote 6,800. My mistake. That is supposed to be 68,000. Vacancy rate, the lowest we've seen at 7%. All good for the average. What happened here? For adjusted rent to price ratio of 18%. So that's what we have. Just to recap, we had at number 5, West Palm Beach, Florida. Number 4 was Memphis, Tennessee. Number 3, Arlington, Virginia. Number 2, Baltimore, Maryland. And number 1, Cleveland, Ohio. Before we go, and I'll answer a couple questions for a few minutes here. Before we do that, I just want to remind everyone that this is a very high-level analysis. It's meant to look at markets across many different parts of the country. Let me know in the comments. I'm curious, because I think a lot of people are, when they're first getting started in real estate, are looking at which markets to find. Like you don't know if, should I invest where I live? Should I invest a county over? Should I invest out of state? What block to live in? So this is really sort of the high level analysis. But what you can do with this exact formula is do it when you find a property. When you find a property, find a more accurate rental comp, then adjust it for vacancy, and then divide it by the home price. That will give you an estimate for how much cash flow you can get. That way, if you're comparing a property in Cleveland or a property in Florida, you can see which one is probably going to have better cash flow. All right, so that is what I had. Robert says he invests in Cleveland. Congratulations. Regina said she just bought 2 turnkeys in Cleveland area. That's awesome. Good for you. That's great. Selena, we did not go over Minneapolis. We're just going 5 top cash flow cities. Unfortunately, Minneapolis did not make the list, but I do want to let you guys know. So this is an incomplete list. I wrote up a much more detailed analysis of this in the BiggerPockets Wealth magazine. It's just about to launch. So if you guys are interested in learning more about doing this type of analysis, you can get the BiggerPockets magazine. And that would be a really good asset to you. It's beautiful. It's this brand new thing. It looks amazing. And we're going to be, you'd get all the other great articles about that as well. But if you really want to understand this on a much deeper level, please check out the magazine. It would be great. So let's see. I will take some questions now. Let's see. Jason asked, what period was this data extrapolated from? I used the most recent home price data and the most recent rent data that we get at BiggerPockets. So we are releasing a product for called BPInsights next month that's going to be using this data and make it available to people, to our members. And so I have access to this now, and we're using that from the most recent months. Stephen, I don't know what parts of Cleveland. That is, something that we'll be offering in the next couple of months, or you can look up rents per property. But we're just looking at a broad city level right now to help people hone in on markets that they might want to start looking for specific deals for. Victor asks, what's public market data? BiggerPockets will have this soon, but not for another month or two. What about Detroit? Detroit did not come up here for in the top 5. I'm not. If you want to read more about it, again, in the magazine, we have some more there, or in BPInsights in a month or two, but we don't have that right now. Okay. How's the average home in Cleveland? If you listen, sorry, Esteban, it was a mistake. It was 68,000, not 6,800. Stephen Mercado, yes, the data is going to be for pro members only. Let me scroll back up here. Sorry. Carla asks, what markets are being evaluated for BPInsights? Is it just the MSAs, or does it go deeper into some markets? It goes into every single market. So right now, you can, if you're a BPInsights member, you can download rent data for every zip code in every city in the country. In a couple of weeks, we'll be having sales data, sales volume, foreclosure volume, all that kind of stuff. All right. Let's see. Best upcoming hot market predictions for New York City outer states. I have no idea. I'm sorry. Angelica, are you able to get the first issue of the magazine anymore? I am not sure. Maybe we can follow up with you after that. Okay. Do you expect another housing crash soon due to COVID-19? I was waiting for that question to come. I don't personally. I think there's a small chance that we'll see a small decline in prices this year, but it will be short-lived. If you see, just talking to real estate agents, there seems to be demand. People still want to buy homes. I think the problem right now is that a lot of people are waiting to list their homes. So you see that transaction volume is down a lot across the country, but I do think that it's going to pick back up as the economies open. It does seem that people really want to buy homes. And if you were planning to sell your house, I'm sure you're still eager to sell your house, and you'll probably do that as well. Sandra said, would you use a management company if you live out of state? Yeah, definitely. I mean, I live in Europe. So I moved from Colorado to the Netherlands earlier this year. And I had to hire a property management company for the first time. And honestly, I love it. I self-managed for 10 years and, did a lot of handyman work for 10 years while working full-time job and doing other stuff. And, it feels great to hire a management company and not have to worry about the day-to-day stuff. All right. Gerardo says, what is the difference between the magazine and the forum? The magazine is a lot more professionally written articles. They're animated. There's a lot more data-focused content in there as well. And they're professionally written. We have a lot of blog writers who are real estate professionals, but the magazine is going to bring more professional approach to and more in-depth content for serious real estate investors. So that's the main thing for the magazine. Do I invest in the Netherlands? No, not yet. I've only been here for a couple of months, but I'm thinking about it. I'm learning about it. Steven says, are hard money lenders only dealing with experienced investors during these times? I've kind of heard that, but I don't know. I've heard that hard money lending volume is going down. But I still think, and I think in times like these, you will see credit markets start to dry up. Hopefully that's short term, but I do think it's probably a little bit harder to get a hard money loan now than it was a couple of months ago. Okay, how about a tool that accounts for taxes like property taxes or state taxes? We will have that in BPInsights, Matthew. So that's a great point. We'll have property taxes and state taxes for every property. How many properties do you own in the US, and do they cover your cost of living in Europe? I own 5 properties in the US, and no, they don't. I work full-time at BiggerPockets. They certainly help, but no, they don't cover my cost of living. Do you believe too much information can lead to analysis paralysis? I just lost it. So I actually, I'm a trained data scientist. So I think that the more data you get, the better. I mean, I follow my gut as well, but especially if you're new, like learning the math behind it is absolutely essential. Like if you don't know what a good deal looks like, if you don't know what a good market is, if you don't know what a good strategy is, you're just guessing, and maybe you'll get lucky. But there is a way to de-risk real estate investing, and that is by understanding your market, having really good data, and being very solid in the way that you analyze deals. So I think the more information, the better. That's me personally. Someone I can't pronounce it. Texana Conda said, "Is this a bad time to buy my first rental?" No, I don't think so at all. I think based on what I was just saying, like if you can find a good deal, then it's still a good deal. I do think it might be difficult to find tenants while we're still on lockdown, but hopefully that will be ending in the next couple of months. And once there's good tenants, I think any deal is a good deal. Okay. Carla said she's spoken with a number of hard money lenders who are still working with a couple with new investors. However, they are tightening requirements and qualifications. I do not own any properties that rent to Section 8 participants. I definitely would be open to it. I just haven't. I previously lived in Denver for 10 years and invested primarily in the neighborhood I lived in, and there weren't many Section 8 opportunities there, but that I would definitely be open to it. Carla Davis said, would you recommend against Burr strategy right now, that given that home values may be going down? Not really. I mean, I think there is a possibility that could go down, but it really, again, every deal is, I think it's up to the investor to find a deal that works right now. And that's true in any market. So I think there are still deals to be had. I also think, I was thinking about doing a BRRRR recently and I couldn't find a contractor who could do the work within like a year. So you might be able to find a contractor better right now. And maybe you just rent it longer if you can't sell it immediately. Can you talk to how people invest in highly appreciating areas where cash flow is low, sometimes even negative? Yeah, I mean, certainly don't invest in anywhere where cash flow is negative. I mean, if your neighborhood really doesn't have any sort of cash flow that is acceptable to you, I would consider either neighboring areas and just doing a real thorough search on where, if there's a suburb outside of a city or maybe a small town or anything in your neighborhood. If not, there are turnkey and out-of-state options that are definitely good for a lot of people. Michelle Davis said, do you think paying off mortgages on rentals, even with low interest rates? Personally, no. I mean, it sort of depends. I'm kind of waiting to see how a lot of this shakes out. I don't think it's going to have a long-term effect on the housing market. Maybe I'm being optimistic. I think maybe short-term. And personally, I would rather have the cash to buy another investment than paying down my mortgage. All right. I'll see. Sorry, I'm getting a lot of questions here. I'm trying to find some of them. All right. I've got about 3 more minutes here. If anyone has any more questions, if you sent it and I can't, Michael says, had you ever used a paid off property as collateral as a down payment? No, I've never paid off a property, so I have never done that. Thoughts on short-term rentals property now considering COVID-19? My short-term rental is definitely losing money right now. But, I approach short-term rental as, a high upside kind of thing. My long-term rentals will cover the mortgage for that property, luckily. So I'm not having to come out of pocket for that. But I do think there's going to be a lot of turnover in that market. I think we might see some short-term rental hosts, people who are, at 4 or 5 properties, are going to be taking a very serious hit right now, unfortunately. And some of those properties might go on sale. So it could be a buying opportunity, but I think a lot of people are going to be scared to get into the market. I want to Taylor, do we have a list of lenders on BiggerPockets? Yeah, you can go on there and see all the lenders that are affiliated with BiggerPockets. Well, not affiliated, who use BiggerPockets. Ricardo Perez said, I plan to invest in Springfield, Massachusetts. How can I get data that BiggerPockets provide for that market? If you're a BiggerPockets Pro member, you can download the spreadsheets that I've been making every week that have all of our rent data. In about a month or 6 weeks, you should be able to get all of the, we haven't officially launched BPInsights. That's why we're just doing these sort of Q&As, announcements. But in about 4 to 6 weeks, we'll have the full data set where you'll be able to get all of the data about any city. As an out-of-state investor, do you see the value in buying turnkey rentals as opposed to buying properties that will need some rehab? Honestly, because I work full-time, I am more interested in turnkey properties that are ready to go. I don't really have the time to manage a rehab. So that's just my personal opinion. But I think that might apply to other out of states as well, Verna. I think that, rehabs can go wrong. And if you have someone you trust there, that would be great. But I think if you, if you're just signing up with a company you don't know as much about or doesn't have a great reputation, I would be a little more hesitant. But that said, there are a ton of really reputable turnkey companies that could manage that for you. Angelica said, thoughts on negative Fed rates on real estate? I don't think they've done that yet, unless I missed something this morning. But I honestly don't know. I'm really not an economist. I think it will just drive mortgage rates down even lower, but I don't really know what it's going to do, to be perfectly honest. Anthony asks, how do you feel about house hacking in a slower market? I always think house hacking is a great idea. I mean, there's very little to lose in house hacking if it's reducing your own monthly expenditures. There's very little to lose. So I think house hacking is sort of a good strategy in almost any economic environment. All right, I will answer like 2 more questions, and then Matthew asks, why am I using average instead of median? I don't know. I just did that for this one. You're probably right. I could use median in the future. Would you recommend buy a house with tenants? Yeah, I have several times. It's not always, doesn't always go great, but for the most part, it's worked out for me. All right. Well, thank you guys, everyone. I will come back in a couple of weeks to talk again about data and how to use it for your real estate investing. I appreciate you all being here. Thank you guys so much. A couple of people asked if this will be replayed. It will. You can find it on our YouTube channel, I believe. And leave comments if you guys have any suggestion for the future. I'm happy to work that into some of the next Facebook Lives or live streams that we're going to do. Thank you guys very much. We appreciate it, and we'll talk to you soon.